Hello traders, Gary Wagner here, just before 10:15 in Honolulu, 4:15 in New York. It is Thursday, September the 1st, 2016, and this is the Daily Report for Gold and Silver. We have a nice showing across the board pretty much in the precious metals. Platinum is trading lower on the day, but we've got nice upside moves in both silver as well as gold. I've also got my updated forecast model that I'm going to be excited to share with you in just a little bit. But first, to the markets. Gold currently trading up about $5.60 at $13.17. It's had a low today of $13.05 and a high today of $13.18. Of course, that is COMEX. When we look at spot is up. It's up about $4.70 at $13.47. The low $13.02 and the high $13.15. Taking a look at silver, $18.87. Call it $18.88, roughly in that area. But percentage gain up about 1.4% or 27 cents. And that, of course, is spot. Finally, I want to take a look at COMEX futures in the silver market at $18.95. Also up about 25 cents. Net change approximately the same, with a low of $18.65 and a high of $18.99. So traders, if you recall from yesterday's show, I talked about the fact that we are absolutely at a critical area in both gold and silver in terms of a technical basis, and that was based on a Fibonacci retracement number, which is a 38% retracement, which comes in roughly at 1308. I spoke about the fact that if we hold this area, this could be a sounding board or a pivot point for the market to really have a nice bounce to the upside. However, if it breaks through this particular price point, the next real level that it has support at on a technical basis really doesn't come in till about 1266, and that is a 61% retracement. And of course, that retracement is based upon this move from roughly $1,200 to about $1,380, so about $180 range, and you get these two areas that are of critical importance. Now, at least for today, it absolutely seems as though we might find some support here. In terms of a candlestick pattern, we've actually seen this market break down to these areas, and then today's action, and let me go ahead and blow this up a little bit and kind of center it, but this is absolutely what is called an engulfing bullish. An engulfing bullish is simply defined as after a defined downtrend. We get that. You get a red-bodied candle. That is the kind of the final move down, and then you get a green candle that opens at or below, depending on whether you're looking at COMEX. COMEX, you can certainly have a open that is below the close of the prior day, and then it closes well above. In other words, that it engulfs the entire area, and by doing that, you get this simple two-day pattern. Now, you act upon this pattern only if you get confirmation. Traders who've been with me for a while know what I am referring to, and that means that Friday's candle, tomorrow's candle, we need to see it have a higher high, let me get my pointer, a higher high, a higher low, and it has to be green, meaning it has to close above where it opened for the day. Now, traders, I talked to you over the last week as this market came down and specifically broke below this compression triangle right in here, our upper level resistance, our lower level support. We absolutely got a break. And as I said, I really need to go back to the drawing board, take a look at our models, and redefine, if need be, how that model, the current Elliott wave count, is constructed. And I've done just that. And this is the old Elliott wave count that I had prior to our updated count. And as you can see, I was under the assumption that we had already topped out at 3. And that's where the confusion came in, because quite honestly, the upper level targets that I have are going to be extremely difficult to be achieved. And plus, the count didn't make the kind of sense that it needed to. So let me present you with our updated count. And those who have, you can always go back to yesterday where I had printed the charts here, so if you want to compare them. But in essence, what we're looking at is the key distinction comes in from this wave 2, because up till then the count is exactly as I had it before. In other words, the belief is that we had a wave 1, Then we went into our A, B, C. That completed our minor 2 right here. And from the minor 2, we went into 3. Now, I was under the belief that we had the top of 3 here. We had a truncated 5th possibly here. But I am now looking at this quite differently. And what I'm looking at is as follows. I now believe that in terms of our 3, our minor 3, which is far from completed, we have gone through wave 1. I also believe we have completed wave 2. If we get our bounce here, we are probably headed towards our wave 3, which should take us a little bit beyond by virtue of the fact that you do want to get a higher high, and it's got to be at least equal to. So this is not to scale, obviously. Then we'll get our wave 4, and then our final wave 5 out of 5, and that will complete our minor 3. Traders, as you can see, with this model, 1, this most recent sell-off did not inflict any long-term damage. It did not change our upper level forecast. In fact, I'm still looking for the $1,400 area. I don't know if we will see it on this particular rally here or our subsequent rally, meaning this 5 out of 5 to complete this wave 3. But what is most important is that this count accounts for the latest kind of downturn in the market and kind of smooths things out. And so this is our current count in gold. And so traders, with that in mind, as I said, if we get our confirming candle on the engulfing bullish in gold tomorrow, we will issue a buy signal in gold. We're also going to be issuing a buy signal in silver. We talked about over the last couple of days that we had a critical support level. This support level coming in roughly at 1850. You can see that over the last trading week, we've bounced around but really haven't been able to break it. You get a variation off of a Three River Morning Star right in here, the small star gap between the red and the green candle. However, typically you want to see it occur right after, but you can see you almost had a variation right here. So, as I said, if we get our confirming candles tomorrow, which would mean on silver, we would need to see a confirming candle, which would be a green candle with a higher high and a higher low, and that would complete this Three River Morning Star variation. And then in gold, we had the engulfing bullish, both coming in at very, very critical support levels in terms of fib base support levels. If they hold, traders, I think we've got a good play to the upside in both gold and silver. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review.